Tejas Networks reported a weak set of numbers for the March-ended quarter, with revenues dropping nearly 56%, while EBITDA coming down as much as 78% in the fourth quarter of financial year 2018. To help us decode the numbers in detail, joining us now is the Managing Director and the Chief Executive Officer Sanjay Nayak from Tejas Network. So, Mr. Nayak, your fourth quarter was pretty weak compared to the last quarter and also compared to the last year. So, can you please take us through these numbers and what led to such a weak quarter?
So yes, you're right. I mean, first of all, I would like to emphasize that we are really not a quarter-on-quarter business. We are a business which is looking at the next 2 to 3 year outlook in the medium term. On a year-on-year basis, as we had indicated earlier in March, that our business is a little bit lumpy and some of the orders just got delayed. So as a result, instead of getting revenue in the last quarter, they are going to be for this fiscal year. I'm actually happy to say that we are starting the year with the highest ever backlog of 579 crores. So we have a very strong momentum in the coming year, and we believe that we should be able to get a very good growth as well as profitability in the current year.
So you're saying it was a weak quarter because of order delays in this quarter?
The orders came late. So if you really see, we are our business are really large telcos and large customers like government. And the order sizes are typically large and related to our company. We still have a little bit of lumpiness. As a result, on a quarter-on-quarter basis, it's very hard to monitor the business. And we really look at it more from an annualized and a longer-term perspective.
So what is your current order book and from where are you getting these orders? Is it from the government contracts or from the private players?
So our order book today is at, starting from on April 1 was 579 crore. Our order book significantly is from tenders that we have won, which are typically from government entities. In addition, of course, we have orders from private customers, which came a bit late in the year, as well as from international customers, which came a bit late. So I think it's a mix of the order book across our three customer base, which is the government in India, the private, as well as international. In terms of, by the way, from a last year perspective, the part of the business which did not do well was the international OEM, where we are OEM suppliers to some of the larger equipment companies in the world. So the international business is going through a little bit of a transition where we are focusing more on our direct sales. So the decline really in the international OEM business was partly the reason for our overall decline on the international. Otherwise, the direct business in Southeast Asia, Africa, and now in the US is really seeing a lot of very strong momentum as well now.
So now, given the fact that your FY18 was weak, what is the kind of revenue and EBITDA growth that one can expect for financial year 2019?
So first of all, as I mentioned earlier, it's very hard to give a guidance in terms of a year-on-year basis, quarter-on-quarter basis. But we have maintained earlier that we see a 20% CAGR growth in the medium term happening. And this year, since we had a slight degrowth last year, we expect the growth to be even higher. And in terms of our profitability as a product company, once our top line grows, we do see expansion in our profitability. So we do expect profit before tax again to improve compared to the last year's level. So I would say this is going to be a very solid year. We start with a very strong backlog. All the investments we made in international sales as well as R&D should start showing results in this year. In addition, we are in discussion with a lot of private operators in India for larger applications in their networks. And needless to say, the BharatNet Phase 2, which is one of the large government projects, is also into a very strong execution mode in the current year. So I would say across all the geographies, we see a very, very strong momentum in our business. And we believe that this year should be a very strong year from both revenue as well as profitability growth.
So what is your outlook when it comes to order book for financial year 2019?
As I said, the order book started with the 579 crores. We have, let me give you subjectively, we have a lot of largish deals that we are in a fairly advanced stage of discussions. In India, we have won a bunch of tenders which are going to convert to orders as early as this quarter. We also expect international in Southeast Asia, some of the orders which got slipped from last year to also come in. Again, in Africa, which was one of the geographies which actually grew quite healthily last year, we again are seeing some very large deals. And in US, where we are now going directly, we again have had some good wins. Let me tell you one thing, for example, in the last fiscal year, even though the international business did not grow, we had 30 new customer wins in international. So that gives you the sense of the momentum which is building up. And some of that will, of course, convert to larger order sizes in the current year.
Sir, can you give us an approximate number at what rate is the company expecting the order book to grow?
It's very hard to pinpoint a specific number, but I can give you a little bit of guidance in terms of the opportunities that we are working on. In India alone, for example, if you see Bharti has announced a capex of 24,000 crores, which is the increase from the last year. So as a result, we will see that opportunities in India because of the 4G and 5G future will be lot in terms of the private. BharatNet Phase 2 presents us an opportunity north of 3,000 crores in terms of potential equipment that we can sell, which will get executed between current and the next fiscal year. Internationally, as I said, Southeast Asia, Africa are very large markets, and we are just starting our success there. So I would say the order book can be quite significant, but it's again, the timing is very hard to predict. It will be very healthy is what we can say. The exact numbers are a little bit hard to give guidance on.
So lastly, what will be the major growth driver for Tejas Network? Will it be the international business or the domestic business?
So international business has a low base. So the percentage of growth on international business is likely to be higher. India has a larger base because our larger percentage of revenues in last fiscal year came from India. So India will on absolute terms grow much bigger. And let me also tell you, India today is the world's fastest growing optical equipment market. And we are, of course, the incumbent in the Indian market. So we do see that India business will continue to be extremely strong across government as well as private. But because of the low revenue base that we have for international, we should see a very high percentage growth in the international business as well. So overall, I would say it's a looking good business. And one other thing which is happening is globally, our acceptance of our products is increasing. You would have been reading news last couple of weeks in terms of certain competitors from China going into all kinds of situations with respect to supply chain disruption and so on. And that has really got the customers thinking that they do need a serious alternate to the Chinese equipment vendors, and we seem to fit the bill very well.